As the ASX pushes to new highs, we look at whether the market can push through on the weight and the back of the top 50 companies, or whether they are overextended and we could enter a time of turbulence like we have seen recently with other indices that have pushed through the roof of their highs. Gary will also look at the leading companies that he's putting in his portfolios for the best trading opportunities. And with that introduction, we say good morning, Gary from Novus Capital. How are you?
I'm good, Chris.
So the market has been pushing up higher and higher, and like a magnet, has been drawn to the highs and pushed through just ever so slightly. But the Aussie market, even more so today as well, has been a bit choppy. We'll have some RBA announcements, which could inject even more volatility into the Aussie market. What are you seeing now when you're looking at the US and the indices? Or we'll start off with the NASDAQ if that's easier.
Yeah, I mean, I guess some of those, because obviously you got the NASDAQ sort of sitting under the high. That hasn't gone to a new high, whereas the Dow and the S&P have moved to new highs. So, and obviously the XRO has most recently moved to a new high there. So you get a bit of a mix in there. But I think it's really interesting to look at the Nikkei, because that's one of the few indices there actually that has broken out a while ago. And that was a bit of a level there. It had a few touches of that old high and then finally break through. But we can see once it breaks through, really, like after the break week, it only went another 3 weeks higher before pulling back. And that congestion that it pulled I think it went 3 weeks higher. Then it went, I think it was basically close to 20 weeks ingesting after the high there. So it spent a lot of time there, quite messy. And a bit of a sideways, sort of a slightly downward orientation there. So it wasn't a big correction. Obviously, ended up being like a bit of an ABC, came back to the old high, rested on that, and then it's sort of gone there. So just interesting there. That's an interesting setup there, because normally, like when you see a stock break to a new high, normally they can run stuff there, like 52-week highs. Sometimes they can sort of, they can continue to run pretty hard. So, but not always the case with indices there, because at the end of the day, you are sort of retesting sort of old zones and stuff there. So, and you kind of need a lot of stocks and across the indices to sort of be pretty high there. If you think about the Aussie market too, the banks are all trading on, CBA's on like 20, 21 times earnings, and most other banks are on pretty high multiples. Iron ore prices on has been on a bit of a crescendo, so that sort of had BHP, Rio, Fortescue all sort of coming as well. So, but they're all, so a lot of the heavyweights are already sort of looking pretty extended there. So that's what I mean. You may not get the follow through here that you think you will on a bullish break here. But generally you might get a few weeks, and then you can get a period of consolidation there. What you're hoping for in that consolidation, Chris, is that maybe some of the second tiers, some of the other stocks can do a bit more of the listing, and maybe the heavyweights will go through a bit of a, contraction period there. So maybe just go through have a bit of a pullback there, but maybe like a controlled pullback. And that does sit in well with this election year sort of cycle as well. We sort of know that the first half of the year can be a little soft. The first quarter can be pretty choppy. But then sometimes the gains do come in the second half. But, there's a few different cycles there's a couple of different possible cycles that do run through this year. That I guess for me, the odd one there, Chris, is look at that cycles is that I think, is it 2 out of the last 16 have extended into February. So most of the, if you look at the fourth years and look at most of the election years, most of them have a pullback before, early or late January. Not many make it to February without having a pullback. So we're in sort of I think 2 out of 16 got this far without having pullback. So we're in sort of, kind of rare air, you might sort of say. But the 2 out of the 16 actually that did pull back from a February sort of high actually had larger corrections into March. And one of those is COVID. So that was a pretty nasty sort of fall from February into March. And the other one was might have been 1980 or something like that. But again, it had a fairly decent sort of pullback there. So I'm not saying we're going to get a pretty large pullback there, but just the two outliers there, pushed on through to February and then had fairly large pullbacks. So, but I just think it's, I've sort of personally been writing a few calls on stocks here, looking, I think the top tiers are sort of fairly run pretty hard. They look fully priced, in my opinion. I think you're going to be looking sort of maybe outside of the square a little bit, looking at some of the growth names. If that inflation continues to sort of keep declining here, then that's obviously good for, probably some of the smalls and some of the growth sort of shares. So that's where I'd be probably looking for at the moment there. But I still think you got to be a bit of caution here. Just the history of election years just shows that, it is a pretty choppy, volatile sort of year generally. And I'll just be mindful of pullbacks. I just think you definitely will be chasing this market here at the moment. I think still talking about breadth issues in the States. I'm not sure, about that, but it's but we've definitely seen a couple of distribution days in the last week here. Sort of some of the down days have sort of come in with some reasonable volume. So it just tells me just to be a little bit cautious here. So at this stage, trend's still up, but just gotta be careful and so.
Well, if we extend the report now and look into the trading shares, you've talked about possibly going beyond the top 50 to look for the best trading opportunities. We know that you do a weekly scan of the top 300 companies to find the best opportunities on the ASX. The first one in your report today is ResMed, and we'd love to see the 0-1-2-3 pattern. Something you've covered in great detail before. We've got a playlist at the end where people can go through all the strategies and setups that you look at. This looks quite congested. Now, it is the weekly chart that we've got here. On the daily, is it a little bit more obvious, the 0-1-2-3?
Yeah, no, definitely. It's just highlighting this sort of stock there. It's had a nice little run out of that deep low. Some pretty decent volume there, Chris, throughout that period too. So been pretty robust volumes there. That one little pullback that we got was pretty light volume, and then we've sort of gone on with it again here. Just this has probably been the biggest position I've held, like kind of in the last 6 months, and just kind of think we're hitting a bit of level there. That sort of $30 there. That was kind of the break zone for me, where the sort of stock sort of broke below that and continued its sort of waterfall decline. And it's also an old high there back in 2020 as well. So just think, big round number too. So just think that might be, with the market running here, and I think we're just, as much as the stock has reported pretty well here now, have a pretty positive update. They still have there is one of their largest competitor, Fisher, has had a few issues there, and they will at some point come back to the market. So I'm just sort of like, I think the stock can push beyond 30 here, but it wouldn't surprise me to sort of hit it around 30, maybe have a pullback for a while, maybe just go through a bit of a consolidation period. Maybe it'll come back to 28.50 or something like that, maybe 28, just congest over a period of time, and then maybe it can go again. But I'm just inclined here to probably take some of the profits off the table here. I think, I think up about 24-25% here across the board on that position there. So just time to do a little bit of banking of that profit, I think, is probably the way to go here. At least probably take half off here. I'll probably take 2/3 off myself, hope for a bit of a pullback, and then and maybe add later on.
Right, nice. So that's been a nice successful trade, and as you said, it's one of the larger positions you've held for a while. If you extend through and think, well, what else can you do if you're going to lighten the loads, take a bit of capital off? There are other opportunities in the market, or you've got Clinuvel in here, which is Is that somewhere where you could rotate to, or you want to see a bit more of a setup before you deploy capital?
Yeah, I do like sort of Clinuvel. It's just probably been one of probably, I guess, the opposite of ResMed. ResMed's probably been one of our best performers here in the last sort of 6 months there. This has probably been one of the probably one of the worst performers there. Just really hasn't done much there. Had a bit of a run, but then sort of consolidated back. The only thing you'll see on the chart there, Chris, is it did rally sort of 8 weeks, and then it's pulled back 8 weeks and then held the low. And now we've sort of got a series of high lows in place. We've sort of got that, they've got that 0, 1, 2, 3 pattern again in place here on the weekly. So we really got our, a low back here in early 23, sort of a high low in October, a couple of high lows again here as well. So if we drill into our daily chart there, we'd see that there was a little bit of a descending wedge on that low and just sort of broken out there last week. And we can see there, if you look at the last, I think 4 of the last 5 weeks, the volume's been very tiny on that contraction as well. So much of this pulled back here, there hasn't been a lot of selling over the last 5 or 6 weeks in there. And then, last week we had a pretty strong jump and some good volume finally come in. So saw a bit of a swing high broken on the daily, bit of a descending wedge broken on the daily. So possible good signs there in the short term that we might have sort of kicked this little downtrend. Do have a series of high lows there, some volume coming in. So this is one that I think I'm probably going to allocate some of that, some other funds to here. I just think this is still a pretty good quality company there, pretty well managed as well, it might be worth sort of adding in here.
Well, we know that from the top 50, so they're overextended. The valuations are really high. He's not looking so sharp. Obviously, finding an opportunity in the top 300 that's not overextended has been a harder part in the last couple of weeks. You're sticking with the healthcare thing. You've got Fisher and Paykel Health, FPH, definitely off its lows that it saw last year, which was those October lows you talked about, with the market having a presidential cycle, the best rally. But it disconnected with the market, where the Aussie sort of went sideways. It's definitely come down. We can see that you've highlighted a bit of a descending wedge here. Broke out of it, last October, and then consolidated here. So is that the part that's really catching your eye for the current setup?
Yeah, definitely. And a good observation there, Chris. I mean, I'm covering a few healthcare names the other day. So basically in that healthcare sector, I know sort of Zero Hedge and a few other US sort of traders there have sort of been talking about healthcare in the States, basically being, an underperformer for the last sort of 2 or 3 years, obviously over, while COVID there, and just looking for that sort of sector to recover and show some outperformance over the next couple of years there. So I think it's definitely a sector to be watching a little, there's some value there. A lot of the stocks are, a bit suppressed there. We saw ResMed obviously had a pretty good move, obviously CSL, but looking at some of those other healthcare names that have been coming off the lows there's definitely some value there. And I think there's some better times here over the next couple of years that, if some of these analysts are right here about healthcare. So Fisher & Paykel's had a nice little bounce out of that sort of descending wedge. There's some okay volume sort of driven that little that move there. And then we've had a little bit of a pullback, and there's kind of like a little bit of a sideways consolidation there, like a little bit of a bull flag there. And we've just sort of broken out of that little flag there last week, Chris, on pretty good volumes. We can see throughout that little consolidation and the volumes are light. So, we want to see markets go up, pretty good volume, have a bit of a breather, consolidate sort of lighter volumes, and then see the volume come back in again. So I do think, this does look quite good there. There's a few names in this area that look pretty interesting to me still. So, I think it's a sector we should be looking at.
Well, to round out the sector, you've also got Ramsay Health Care, the operator of hospitals, both domestically and internationally. So Ramsay, similar things what you've said, haven't performed as well over the last couple of years. We're talking about this downtrend, pretty strong downtrend for Ramsay. But once again, you've got 0, 1, 2, 3 base building. Something you've mentioned in the last couple of weeks and months is when you look for a leading company and a good setup, it really helps if there are others within that same group, that same thematic, that same sector with similar patterns. So if we're getting a 0, 1, 2, 3, does that increase your confidence to look at something like Ramsay for a potential trade?
Yeah, so I know it's been a bit of a laggard there. I know we typically like to look to the leaders, show strength there, and then they're often the ones that run there. But the laggards come and sort of can play, can join the party. I think Dicker Data was sort of one that in that tech sector previously was a bit of a laggard, and then finally sort of joined the bullish party and got involved. So the laggards can sort of come in eventually. Just might need a bit more time to sort of build there. So Yeah, we do. We do have that sort of 0, 1, 2, 3 pattern there, which is sort of interesting, bit more of a kind of a basing sort of constructed pattern. If you look into the daily setup, Chris, that sort of high there after the first, well, that drive there, you got a little VCP sort of starting to form too. That little first leg down, second leg down here. We've just got a little contraction going on at the moment here as well, just in the whole thing sort of tightening up here. So it'll be a nice little VCP potentially setting up there as well. Might mean it might come back to say 49, 50, something like that. Ingest a little bit more. But yeah, definitely one to be sort of keeping a close eye on here. I think it looks constructive to me. If we're using that sort of that last little sort of low as a bit of a stop there, our risk is pretty low here, I think, around here as well. So which is kind of one of the reasons I like it.
All right. Well, if we move from the healthcare space and have a look at some of the other, a growth company that has a good legacy on the Aussie market now. This almost looks like it could be a cup and handle, just at first glance. But you've got the Fibonacci movements here as well. So is this of the rally off the low? We're looking at the low here, October 22, moving on up, hit a high just coming into July, 23. The retracement here, is that what's the Fibonacci's are showing? Sort of how much it's pulled back of this prior gain?
Yeah, so it's come back probably just shy of the 50% level. So it's had a decent pullback already. Probably could use a bit more time. Sometimes they do tend to pull back a bit more in time there. But it's interesting here. We've sort of been hugging that 50-week sort of moving average the whole time. We've sort of bounced off that. There's actually been some pretty good volume each time off that. That we saw recently of that pullback. We saw some good volume come in at those lows there. So yeah, it just seems to be sort of building a little bit here. So just probably watching that 50-week. Even on the daily there, that I think it's the 50 day as well has sort of been bouncing around at that as well. So just a bit of interesting sort of setup here. It's not, probably like to see a bit more sort of strength there, but yeah, this is one. Probably looks interesting to me. And if I'm going to play anything here, it's probably looking at some of these growth names because if I keep my sort of risk nice and tight here, if I'm wrong here, I shouldn't do too much damage, and if I'm right here, these are the ones that probably can kick along here. I just can't see too much value in the top end there. So in the market, I think it's going to be a bit choppy. I think trading a bit lighter here and probably just trading some of those names that maybe can move a bit more, probably the way to go here. But I'm probably just going a bit lighter than normal here. I think it's sort of there's a time to sort of some traders refer to it as a green light environment where everything's sort of working. Everything's lined up and stuff here. But I think that green light environment is sort of coming to an end a little bit here. So I think it's going to be a bit trickier here. So I think it's time to sort of start scaling back a little bit. Not having as much risk on. So just trading a little slightly lighter here, I think.
Okay, well, if we move into another one, we've got Aussie Broadband, ABB. This chart, really, you can see the consolidation taking place here. Is this one that you're seeing has the potential to really break out of this congestion, this coil, and go for a run?
Yeah, no, looks quite good. So, so it's used up plenty of time here now on the pullback. Really tightened up in that little symmetrical sort of isosceles type triangle there. It's probably more of the tightening price action that I quite like there. And we're sort of seeing that kind of volume sort of dry up a little bit throughout that little, tightening period there, particularly towards the end of that period. Sort of definitely saw some lighter volumes there. We did sort of just break out of that little triangle there last week, and the volumes were a little bit stronger than normal. So I'd probably like to see a bit more, but so far so good there. And yeah, it does look like a bit of a break of that triangle, and that consolidation, Chris, sits above the previous high as well. So a little bit of spacing there. So what I often refer as a little bit of bullish spacing there. So when the pullback doesn't come back, oftentimes the trend will build on top of each other. When it leaves a little bit of spacing there, it doesn't come back, to the old high, but leaves a little bit, comes back above it. That's what sort of Bill McLaren referred to as bullish spacing there, and that's when basically stocks can get going there and actually go to a new high. So technically it looks pretty positive to me. And that was a pretty impulsive drive too out of that sort of July low. That was a pretty, this is one thing sort of Kalamagi talks about, is sort of having, really strong impulsive moves and then having a bit of a pause, and then, then you normally sort of move in favour of the trend here. So it does look pretty constructive.
Well, the next one on your list is Domain Holdings. It is a company that had rallies previously and still been down. So when you're showing us this weekly chart, we can definitely see it's well and truly off those highs. It has sort of had super technicals at the lows, but then you've got the Fibonacci movements here. So 100 and 0 to the high. So we can see that the pullback that we've had from the high sits this around, what is it? Almost that 61.8, coming to try and touch it at the same time. So working its way down towards that 315, but doing that in a congested fashion that sort of seems to be tightening up a lot. Is that a bullish wedge that you look for?
Yes, that's that sort of descending wedge sort of style there. Has come back to the 61.8. Volumes just sort of started to pick up a little bit around the lower edges there. Again, it is a laggard. It's amazing how Domain literally has been going down for the last 4 or 5 months, whereas REA has been going straight up. So very similar businesses. I know the margins are slightly better in REA, and plenty of good reasons as to why REA is a better company than Domain, but still pretty similar. Margins probably just slightly better for REA, but stocks have gone in completely different directions. So just looking at the technical pattern here, looks pretty interesting. Had a decent pullback there. Still hasn't sort of broken above here yet. So just come to the edge there, but probably looking for a little bit of a B-wave break there, Chris, looking to maybe break above previous swing high. Because at this stage there, all we've got is just consecutive lower high, lower high, lower high. So we haven't broken above a high yet. So we do need to see a bit of a change of character first before we can get involved here. But definitely on the radar for me, just watching this one closely. I'll have to see it sort of tighten up here, coil up, maybe then, break a swing high. And if it does that, then I might get interested. But it's on the watch list here at the moment, just because it's, got a lot of interesting things happening here at this stage.
Right. Well, that gives us one more on your week's report, which is Henson Technologies. Obviously, technology. This one's got a clear breakout showing on the weekly chart. We do have sort of the channel that you're showing that it traded throughout and then started getting up to the higher end of it, broke out of the channel, had a bit of a throwback into the channel, but at the same time created this descending wedge. And clearly it's broken out the upside, which is that breaking a B wave that you were talking about before? That the kind of...
Yeah. No, you're absolutely right there. So you've had that consolidation there, that larger sort of consolidation channel, broken out of that channel, and then come back for a little 3-wave correction, come back to almost the channel line, and then had a bit of a jump there. So textbook looks pretty positive there. The only negative I see, Chris, is that last week was a pretty impulsive move. So a bit of a bullish breakout of the wedge, and although the volume is improved, it's for such a big week, probably should have been bigger. So that's the Wyckoff. So if you look at Wyckoff's theory, Wyckoff will be saying that should have been, a move there. That's probably double the average range for the last 8 to 12 weeks. So when you get a move like that, that should be one of the biggest volume weeks. That's a bit of a bullish break here. So that's the only negative I see there, but everything else looks pretty positive there. Definitely in the right space there. Hanson obviously looking at tech, sort of in that technology space, obviously sort of software, so high margin business there. So that's what everyone's sort of looking at the moment. So definitely in the right sort of sector, right sort of space there. Just technically looks good, but just that volume would have been, if it had been slightly stronger there, I think this would be sort of like, a 10 out of a 10. At the moment, it's probably like an 8 out of 10. It's sort of,
It's the Wyckoff anomaly, is it? It's wide range and not quite matching volume. It leaves you scratching your head. And I think from many previous conversations and recordings, you've said when you see the breakout, you like to see the volume at the start of the breakout to show that there's conviction, and that increases the probability that there could be more legs to the movement. Is that how you breed the early volume?
Yeah. So for me, I tend to sort of scale up into position. So I might sort of start with a starting position, and then I'll, shows the right signs, I'll add to it. In terms of sort of like, in terms of sort of fully scaling up into a position there, I would want to see, that I would want to sort of see sort of stronger volume there. So that's probably the only hesitation. But look, sometimes they start with less volume, that volume can come in later on. You just might find maybe it'll consolidate again. Maybe it'll have a little bit of a consolidation here first. Looks pretty bullish overall. That weekly's pretty positive. There was some pretty decent volume in the first drive there. Just a little bit more selling on the pullback than you'd probably like to see. There was still a few heavier sort of down weeks in there. The last couple of weeks were probably lighter volume there, which is sort of selling did eventually dry up, and then you get your little bit of pop. But yeah, looks pretty good overall. We just, as traders there, we just like to sort of see it all, if you go back and study all the biggest moves in history, and this is sort of what, if you're serious about trading, that's what you really need to be doing. I know sort of, William O'Neill would be just studying all the greatest, stock movements in history, and looking at those in detail, what characteristics sort of set up, what were the sort of technical setups. So yeah, you're sort of looking for stocks with pretty strong earnings, and then you're looking for stocks with sort of strong momentum there, and breaking out the right type of setups there. So whether it's cup and handles or VCPs or whatever it is, but yeah, just the right sort of characteristics there you want to be seeing there. So this fits all the criteria here, Chris. But just technically, we would love to see a bit more volume there. That's probably would just hold me back a little bit from getting super excited. I'm just a little bit excited.
Or just a little bit excited, and on that point, hey, we made
yeah. And I guess you got to be worried about if the market's sort of had a pretty hot run as well, and looking pretty extended here. I know, I saw Jason Shapiro, who's the crowded market report there. He was just sort of saying the speculators have really amped up here in the last few weeks. So the speculators are as long as they've been for quite some time, and that's a bit of a worry, because normally when all the speculators are when they're all crowded on the short, that's when they get bad, and then you get a big jump. When they all sort of are all clamoring in sort of after a market's been running for a while, that's a bit of a risk as well. So some risk there of of seeing a little bit of a short-term peak here. Again, just because maybe euphoria is getting a little bit high here. It seemed like that Meta was up 20% the other night. It's one of the biggest moves for a big stock to ever have. Obviously, Navitas has been running pretty hot as well. So some of those big caps, the Magnificent Seven, as they're being referred to, those stocks have really been humming, and there's some big moves in there. And just seeing some stocks have some really, really big overnight jumps and gaps and things like that. So when you're seeing that sort of frothy behaviour there, it's all good and exciting there, but that can be the type of a behaviour to sort of see at a bit of a peak. So might only be a short-term thing, might have a bit of a breather and congestion, but I do think that Nikkei is a really good case point there, just to sort of go back and look at some of those old indices that have sort of broken out to new highs there. They just don't keep rolling on. We could get a congestion period like that. So maybe we roll on for another week or so here or two, and then we go through a bit of a congestion period. It could be quite messy. So, and that does fit the cycles at the moment as well. So, that's not good news for traders there, because messy is sort of not, conducive to making tons of money. But sometimes, when you've had a good phase like this, it's more about, if you go through a messy period there, it's about not losing much money as well. So if you can avoid losing too much money, that's why I sort of think now's the time to wind back the bet size a little bit. Just sort of hold a bit more in cash here, have a bit more hedge. And if, some people don't play the short side, but I think I think maybe a balanced approach between some longs and shorts here is probably, for those who do play the short side, is probably a reasonable approach. I'd probably be holding a bit more cash than normal. I'd probably have a couple of shorts in there mixed in with my longs as well.
Well, that's some good insights to take into the week ahead. We've got inflation, the RBA meeting this afternoon by the time this goes public, so that'll be announced. But we do have some insights to take into the opportunities that we've got and whether we're taking money off or chips off the table and lightening the load. So we thank you for sharing that. Gary Glover from Novus Capital.
Thanks, Chris.